Hi, my name is Adam Barr and I'm the founder and CEO of the Financial Powerhouse. Now, today we're going to talk about financial literacy. When you think about financial literacy, think about where do you get all your lessons about money and about investments and about savings and about stocks or bonds or mutual funds, right? It occurred to you that we never really learn about money, not in school, not in academia. So where do you get it all? It's coming from home, or it's coming from friends and people that we see, family that we see. And so how do you know that what you learned is going to serve you in the best way possible? And that's why financial literacy is important. So today we're going to cover some terminology that will help you be more knowledgeable and educated about money. So let's start. So the first term I want to cover is revenue. So what is revenue? Revenue is what you earn. It could be from a job, it could be from a business, it could be from passive income. That is revenue. Now that we covered revenue, let's talk about expenses. Expenses is what's coming out, is what's going out from your income, right? So you think about it as your expenditure, what you spend. Now, what is your net profit? We talk about revenue, we talk about outcome and income. Now, what is your net profit? So when you put your revenue versus your expenses, you will get your net profit. And that is something that is very important to do, to calculate, because remember, it's not about what you make that counts, it's what you keep that makes the most difference. So make sure that what you keep is more than what's outgoing. It's more than what you spend. Now, a lot of people ask, what is depreciation? We hear about depreciation a lot in real estate. We hear about depreciation of value. What does that mean? So depreciation is the loss of value over time. So think about your assets. If you continue to lose value, that is considered to be depreciated assets. Like a good example would be of a car, right? The longer you hold on to the car, the more you lose in the value of the car. So that's depreciation. It happens in real estate. It happens even in losses of the dollar, the value of the dollar. Now, on the other hand, appreciation is the increase of value over time. And that is really why we want to invest. This is exactly why people buy real estate, people invest in stock, because they want to make sure that the value increases over time. Now, what is equity? Equity is your ownership or share of ownership in a company or in a business or in an organization, or equity in real estate, meaning the value of your ownership of that investment. So what is vesting? Vesting is earning your equity over time as opposed to all at once. So for example, if you bring in a partner to your company and you want to give them a certain amount of percentage, instead of giving them everything up front, you could say, I would like you to vest over the period of 4 years. So you can give them, if you're going to give them 10%, you can give them 2.5% every year for the next 4 years, which at the end of the completion of the 4 years, they will have 10% ownership. So that is vesting. Now, what is an asset? An asset is something that you own. And I like to think about an asset as something that put money in your pocket either now or over time, as opposed to taking money away. And what is a liability? A liability is the exact opposite of assets. A liability takes money away or puts a drag on your finances. Now, what is a balance? A balance is the difference between debits and credits in your account. Now, let's get into bonds and some securities. What is a bond? A bond is a debt security, meaning that either a corporation, a company, or a government body wants to borrow money from people like yourself, from us, and therefore they issue a bond. A bond is a debt. So if the government wants to build roads or to build schools, the city or state, they will come to you and say, I would like to borrow money from you, and for that, I am willing to give you a certain percent in return. So, for example, if I can borrow $1,000 from you, I will give you 5% in return, and then at the end of the period, I will give you your money back. That is a bond. So what is a stock? A stock is a percentage ownership or fractional ownership in a company, because we can't just go out there and be an investor in Apple or in YouTube or in Amazon without really being an early investor. So what we have an opportunity to do when we buy stock, we basically buy in a fractional ownership in that company, and therefore we have the opportunity to have that money appreciate or grow over time, even though we didn't have an opportunity to invest money early on before there was a lot of people investing in the company. So that is a stock. And now that we went over some of the terminology, some of the vocabulary about investments and about financial literacy, we will conclude here. Please like the button below and subscribe if you like this video. Let us know if there's anything in particular that you'd like to learn about, and we'll see you on our website, thefinancialpowerhouse.com. You can also follow us on Instagram at raisethebar.rtb, and I look forward to seeing you in the next video.